Hello and welcome to BloombergQuint. You're watching IPO Adda, and the company today in focus is CarTrade Tech IPO, which is opening on August 9th and closing on August 11th. The company has priced its IPO between 1585 to 1618 per share, and the total value of this IPO is 2,998, giving the company a market value of 7,415 at the upper end of the price band. Joining me today is Mr. Vinay Sanghi, Chairman and Managing Director and CEO of CarTrade, and Aneesha Menon, who is the CFO at the company. Vinay, let me start with you first. Give us a brief idea of what is the model that you work on, business model you work on?
First of all, Sajid, thank you for having us on IPO Adda, and very happy to be here. So we are a platform, Carvale and CarTrade.com are platforms where consumers like you and me can come and buy a car, a new car, a used car, or sell a car. 32 million monthly unique visitors come to Carvale or all our platforms to do this. When you come to our platform, you can compare cars, look at features, specifications, what other users think, and make a decision on which car to buy. And once you've done that, you can choose a dealer, select a price, look at an offer, and then indicate a intent to buy after that. So as I said, we are a platform where consumers can come and buy and sell a car. We also have another platform, a C2B, B2B marketplace, where consumers like you and me can sell our vehicle, or big businesses can sell vehicles. And the buyer on the platform are dealers in India or fleet owners. That's a completely electronic exchange. On that platform, we auction almost 800,000 vehicles every year. So these are two distinct platforms. One's a platform where consumers can come and buy or sell a car, and the other one is where businesses and consumers can sell, and then the buyers are dealers and fleet owners.
So to put it in simple terms, it's a marketplace and not an inventory-led model, right?
That's absolutely correct. In our consumer platform, when you come to look for a car and find a car and select a car, the car will be sold by a dealer or a manufacturer. In our auction marketplace or a transaction marketplace, when you're selling a car or a big business selling a vehicle, the buyer is a dealer or a fleet owner. So we are completely a marketplace.
So so you are basically working on a fixed fee model per transaction or per buy or sell of car that happens, right? Unlike in other your competitors like a Cars24, which buys cars and it puts an inventory and then sells off and books a profit as well.
So our focus always when you're selling your car has been to make sure that you as the consumer get the best price, and therefore we're a marketplace model. We auction, when you come to a platform, you auction your car, and the highest bidder, a dealer or a fleet owner, would directly pay you. So as I said, we charge a commission or a transaction fee in that business. When you come in to buy a car, a new car or used car, and you're looking for your car, we monetize car manufacturers and dealers for advertising revenues.
Can you give us an idea of how this market is developing? Because it's becoming a very competitive market, and there are a lot of players who are coming into this market as well. And at the same time, you're seeing a profile change of users as well. The younger generation is not much used to buying cars and selling cars. They're basically looking at ride-hailing, platforms like Uber and Ola. And so what is this kind of change, socioeconomic change, and the way car selling and buying is happening?
So our focus, Sajid, is to build an automotive digital ecosystem in India. If you come to our platform, we want to help you find your car, select a car, get a loan, get a policy tomorrow, book a car, and one of our dealers will have it delivered to you, right? Our focus to make sure to simplify that entire journey for you. I think more and more people, or most people now, come online to do their work before they buy, even though car buying is quite a physical thing because there's a little bit of touch and feel around it. But you're seeing this, change dramatically, and I think this low-touch environment of this pandemic has actually accelerated that whole digitization process of the industry, right? So we feel in this new digital world, buying a car online is really here now already, right? The other part is, we've seen that car ownership is on the rise. If you see car sales in the last few months, what this low touch or this current environment has done is made sure most customers don't want to get into a shared environment or use public transport, and ownership is on the rise. You may know that India has only 22 cars per 1,000 people. So the headroom to grow is just enormous. I think the very promising days ahead for the auto industry, both the new car or the used car industry or the two-wheeler industry in India.
And what about the new trend of which we saw pre-COVID of younger generation not going for cars? Are you seeing that generation again coming back to cars?
That trend was, in my opinion, that trend was not the case. I think in a market like India where 22 cars per 1,000 people, ownership is going to continuously rise. I think whether I just believe that it's such a personal thing that people want to own cars. I don't think that trend is there or likely to be in the future as well.
Have you seen a profile of younger people buying second-hand used cars?
Very much so. We're seeing a lot of profile of all sorts, whether it's younger, rural, urban. It's a cross, and we operate on a national basis. So we've got a cross section of customers of all types and all ages. And also, one more thing I want to correct: it's not just the younger generation on the internet now, right? I think everyone's got a smartphone. So whether you're an old man like me or a young boy, either way, you're on the internet through your mobile device.
That's great to see that you're considering yourself as an old man, but you are a founder-driven company. I saw that there's no promoters in the company. Why is that?
It's been created. The idea creation has come way back in 2010 for me. As I said, from the RHP perspective, it is a promoter-less company. It's a widely held company. There are institutional investors, shareholders who play a role. There's a professional board which plays a role. There's a management team which play obviously a significant role in the company. We treat all our colleagues and people on the board and the management team as owners as well. So that's just the new culture of founder-led, investor-led businesses.
Because mostly I've seen even if the promoters or founders have minority stakes, they still continue to be promoters in the company. But here in your case is 100% public ownership, including yours, which has been classified as a public ownership. So I wanted to know why you haven't put your skin in the game by designating yourself as promoter when you were the founder of the company.
No, I just think it's we are really a collection of all individuals here who and that starts at the investor level or shareholder level, and then the board, and then all the entire team. Someone like Aneesha is on our board. We are 50% independent as a board, as a company. So the idea may have come from anywhere, but really it's a team which is driven by investors, directors, and management team taking this forward.
Okay, I wanted to check one question on pricing. I think Aneesha will come in here. You did a preferential issue of preference shares in October last year at 825 rupees per share, and then recently you did a private placement at 1376 rupees a share, and you're offering at nearly 1618 rupees per share. Can you just justify the premium? Why you're almost doubling your price in a year's time?
I wouldn't see it like that, Sajid. And in fact,
because I'm tell you why I'm coming this question, because last year has been a very washout year for everyone in the economy, including your revenues have come down. So how do you justify doubling of market value in a year when there has been a mass wealth erosion and revenue erosion for most of the companies?
Sure. So like you rightly pointed out, the period you pointed out where we did this primary round was April, where everybody, like you said, was impacted by the lockdown and the COVID, right? If the investors see the promise that this company has, in a period like COVID, if they have committed to this company at a price of 1376, the price rise that you see from there is very, very marginal. So, and
15% premium, yeah.
But we've seen that. We've seen the growth. I mean, from last year the same time to this year the same time, the company has performed better than what we were last year during COVID. And that price that you're talking about is when we were impacted by COVID. So it's despite that the investors have seen the potential in the company. So 15% is not very, very large.
No, 50% is not very, very much, but 100% is definitely, because from October to June, July, August, nearly doubling of price is something which investors have to look at it. That's why I asked you what has changed dynamically for you for investors to give you 100% premium.
So let's put it the other way. So COVID does not impact us. Lockdown did. So lockdown was like physically shutting everything, right? That impacts us. COVID, I'm sure, is not good for anybody. But one thing good that COVID did is move the whole digital needle, right? So play that we have or the pool that we have is trying to take the pie from the offline. And today, we've been doing this for, I mean, from the year that we have started, we are pushing for digital. What COVID has helped us what COVID has done is has accelerated that growth. So I wouldn't say that it is 100% is attributed to that, but there is a lot of play of seeing the move or seeing the whole digital wave getting the importance that it really deserves.
So Vinay, has the entire COVID led to more formalization of the used car market?
I think what COVID has done is two things for the industry. As Aneesha said, the first part was the tough part, where you had lockdown, where the industry was just shut. And life was generally confined to your houses or to a limited geographic area. I think the bigger impact on COVID on the auto industry are again two. One is, of course, car ownership on the rise, because people want to own what they ride in. And that's obviously used cars are more affordable, so that grows. But the new car industry has grown as well, as you can see the numbers in the last few months. And I think the second big impact for the auto industry is digitization as itself. The reality is that consumers' behavior in consuming any product has changed, because now it's digital first. I think the reality is also that data availability has dramatically improved in BCD towns in India from telecom providers. And we all believe that that behavioral change is really going to be the way at least the auto industry will look at its future. Customers, manufacturers, dealers, banks, everyone just become far more digital savvy than they were a year ago.
What about formalization of this industry? Has it increased a bit? I mean, in the sense, it's taken a leap in this year from unorganized to organized players like you. I'm just from.
I think to be the used car industry over the years, I won't say in the last year, but over the years is getting more organized, right? So you have manufacturer and dealer, used car programs. You have independent used car chains. You have a single outlet dealers who have got much better at their products and services. Of course, there's a whole digital interlink with the used car industry now. So dealers can buy most of their stocks from a digital platform like ours, where they can buy from our consumers which are selling. Also, a large part of dealer sales now do come from an online sale as well. So there is this whole organization going on in the used car and new car industry, I would say.
I understand that you're a zero debt company, and also the fact that what do you call the working capital requirements very minimal there for you. Is there a plan to expand your entire offering to beyond what is today? Means what could be the diversifications which can be done from the platform you already sit on?
So the first part is, we are a zero debt company. We have, as the RHP shows, there are cash and cash equivalents. We would ideally, of course, want to look at, and also had a successful acquisition story in the past, or stories in the past. So acquisitions, is a part of our future strategy. Obviously, for us, acquisitions are about what creates value for our customer, right? If we get 32 million monthly unique customers, how do we serve them better? Today is to buy a new car or buy a used car or sell a car. Of course, tomorrow, other value-added services or other services related to that purchase or ownership of a car itself, right, is something we would always look at enhancing on our platform, because at the end of the day, we are creating an automotive digital ecosystem and connecting all stakeholders. We want a consumer who owns a car like you or me to be able to avail of anything and everything to do with that ownership of that car.
So how is the revenue model worked on? You said 32 million unique customers coming on your website. So you have advertising revenue that comes from there, right? That's my understanding is. What about conversion rate, which you do? Means of the number of visitors that come to you actually go up to buying or selling a car or any other vehicle?
So, the RHP doesn't give these metrics. The RHP talks about 32 million customers coming. These customers come to find a car, select a car. The customers come to, a new car, a used car, that is, or sell a car. The customers also come to show an intent to buy. They can put in a lead at a dealership. So our revenue model there really is about advertising revenues from manufacturers and dealers. And as I said, we have a second platform, a C2B, B2B platform where consumers like you and me can sell, or big businesses can sell. Buyers are dealers and fleet owners. And there we have a commission or a transaction fee we charge. We're asset light in both our businesses. As you know, the EBITDA margin or adjusted EBITDA of the company is approximately 27 odd percent. And the nature of these revenues is that, incremental revenues, we have a lot of leverage over.
Mm-hmm. So what is the conversion rates? Because normal industry rates which are for this, for how many? Because you do 27.11 million was the last quarterly one, if I'm not wrong, in
That's
April
correct.
to June. And conversions were what? Sales were roughly around 300,000, 33,000 or something, if I'm not wrong. So
no, they're different platforms. So I think our C2B, B2B platform sales were there. Our consumer platform gets 32 million. Those are not connected numbers. The 32 million has a funnel to it. Obviously, as I said, the RHP doesn't carry that funnel, so it's not data we can. But it's something.
But can you give a industry metrics? What normally is that funnel, and how does it come down?
I think the industry report doesn't cover the funnel as well.
So that's something you keep it to yourself.
No, I don't think we keep it to ourselves. I think what we obviously like to track that closely because it's our business really, right? But the RHP really accounts for all the key metrics, and I think that's what the key metrics are: the number of vehicles auctioned or the number of customers we get per month.
Okay, Aneesha, I'm looking at your goodwill, and a lot of goodwill came from acquisition of Carwale. How do you treat that goodwill?
So fortunately or unfortunately, we are driven by accounts and accounting standards. India clearly says that at the end of every reporting period, we need to test for impairment. So every year we have to test whether there is any impairment called for in any of our acquisitions. We have till date not had any impairment in any of the assets. So like you rightly said, out of the total goodwill that's sitting in the books, largely it's on account of Carwale, and the second is on account of Shriram Motomall acquisition. In none of these acquisitions has ever been an impairment.
And is there a testing methodology? Because revenues are what 10-15% of the entire goodwill which you are there. So is there a way you test what is the kind of goodwill accounting that you do, or we value goodwill in some form?
So what we are expected to do, again, more from an accounting perspective, at the end of this reporting period, we need to get external valuation done. It cannot be based on management's estimate. For the external valuation, they take both from us. One is a DCF method, plus they would also look at the industry. So if there has been anything in the industry which gives an indication as to where this kind of businesses stand, as a revenue multiple, EBITDA multiple, it's a summation of all of it to give a comfort to the auditors, because without which they would not be agreeing to not having an impairment in the book.
Okay, and the profitability of 101 crores has a deferred tax component, asset component there. Have you fully accounted for all the assets as part of that, or will it move on to the next year as well?
No, we have fully done that. So we have large amount of brought forward losses, which has translated into this deferred tax asset. But we've accounted.
And these losses are on account of the acquisitions that you have done, or operational losses that you have accumulated over a period of years?
So in prior to probably 2014-15, there were these large amount of media activities that were done, which did result into a large amount of losses. Those losses has been carried forward, or rather, that is what is given us as benefit of brought forward losses.
Okay, Vinay, can you give an your experience of how car sales are picking up based on what you're seeing? Whether it's passenger or two-wheeler or three-wheeler or commercial vehicle, because you are into various segments. Can you give us a perspective from an industry how these are picking up? Those two-wheelers we haven't seen going back to pre-COVID levels.
So let me start with cars first. I think what we see on the car side is, of course, April to June last year was hurt for the entire industry got hurt. I think since then, in July to September, you saw some bounce back. And in October to March, really, you've seen the industry grow rapidly. Again, there's been because of again lockdowns in some places. Again, from April June, we've seen some resistance, or the industries again had a bit of a slowdown. Of course, it's much higher than last year, April to June. But I think what the industry tends to do is during lockdowns slow down, and then the moment lockdowns are opened up, we see rapid growth. I think that's the way to think about it. We just believe that car ownership is likely to be on the rise, and we just think that the auto industry, whether it's cars or whether it's two-wheelers, in very good hands for the next 3 to 5 years, right? As I said again, India has 22 cars per 1,000 people. The penetration has to go up, and it's very optimistic or good signs for the new car and the used car industry.
And is it possible to give us a idea of how sales of new cars to old cars are happening on your platform? I want to understand whether people are now ready to buy cars online without going to a dealership and getting a feel and touch of it.
So our platform has 32 million customers coming every in a month. And as I said, in the Jan to March quarter, unique visitors a month. They come for new cars or used cars. They come for a car. So when people come, like you and me, they want to buy A car or B car. They first figure out which car, what specifications, variant, etc. Then when the new car fits their budget, a used car fits their budget. And a lot of customers, there's a lot of overlap between a new car, a person looking for a new car or a used car. There is a lot of overlap there. So it's hard to distinguish. I think they're coming for a car. I think at the core, someone buying a car first before new or used. I think that's the way to think about it.
Vinay and Aneesha, it's been a pleasure talking to you today. All the best for your IPO. The CarTrade Tech IPO opens on August 9th, price band of 1585 to 1680. Thank you for watching.
Thank you. Thank you, Sajid. Thank you very much. Thank you.
Thank you.